That process is why the markets move to these logical points. Because along the way, traders have anchored to these high points. And the professional money knows it. You have got to drill it in your brain that these people are very smart and they hire people that are even smarter. They do psychological studies to figure this stuff out, folks. They spend tens of millions of dollars to do psychological studies to figure out how people work, what makes them tick. Behavioral finance is what they're calling it now, and it's all the rage at even places like MIT. Figuring out how people think about price. Because even in the academic circles now, they're figuring out that how people think about price dictates how they will react to price and how they act in price. So if the market can't go down, then it's going to want to go up. And where's it going to want to go up? Right back here, right into these areas where there are anchors, where people have anchored themselves to price. Now, one way to see it a little bit better, let me go to a line chart. And zooming out doesn't help. Let me go back to a candlestick, and we'll zoom out. Now, this is why I like to look at this stuff all zoomed out. Why? Because I can see where these anchors are now. Look at this. There's a bunch right there. There's a bunch here, here, and here. So this whole area is where, these areas are where price is going to want to go. It's where the market is going to push to. Why? Because that's where the market has anchored itself. That's where the professional money knows if you have an anchor here, you have an anchor right in here, and you have one right in there, and you get back to these prices. Okay, so these people, if they bought, then they're losing money down here. So if price gets back up there, what are they going to want to do? They're going to want to sell. So for the professionals, if the pros buy down here, what do they need to do? They need to sell. And they need someone to sell to. Okay? So if you've bought, you've lost, you sell to the pros who bought down here, and they push price up. Let's look at the cycle again. How does the market get up here? Because the pros buy, and they push the market up. And they buy. So they buy and they push price up. What happens to people that are losing money in here? They decide they want to sell. Who are they selling to? The professional money that's already bought. Why is the professional money going to buy? Because the market tried to go down and couldn't, so they know there really aren't that many sellers. So what do? They artificially create demand so they can create even more demand by pushing these weak hands out of the market. Those guys are not going to do that at 2 o'clock in the morning. Number one, because they're not awake, but number two, because they know that even the professional monies know that they can't move the market. They need someone else behind them. So if the professional money buys, how are they going to push price up? By pushing price up very quickly. So let's zoom in again. If gasoline is $1.50 per gallon, and in 4 hours goes up to $3.80, what are people thinking? Holy crap, I better buy gas before it goes to $4. That's exactly what they're thinking. Why do retracements work? Well, because when the market goes up to $3.80 and comes back down to $1.75, what are people thinking? Holy crap, I better buy gas because it's cheap.